Guys, welcome back to our channel. Um, and today we're going to be highlighting some high quality companies that we think are undervalued at the moment, because some of you have reached out to us and expressed, you know, the desire for us to not just highlight quality companies, companies with high earnings, high returns on capital, but those that actually at prices below what we think are the intrinsic value at the moment, so they could scoop them up. So this is our first video in this sort of modified series, and so ever so often we're gonna update it when companies we think come down into the buy range or at a discount. So look forward to these videos ever so often as we update this portfolio, or this watch list, I should say, of companies that are high quality but are currently cheap. And so to kick it all off, we have Viva, which is a healthcare company. Viva is down from its historic PE multiple simply because I think healthcare stocks are no longer in vogue coming out of the global pandemic. But Viva's underlying fundamentals have not changed. In fact, they've actually improved since the start of the pandemic. And so we think this is a good shout going forward. Paycom Software is a high growth um, HR and accounting software that has simply dropped in value because the growth rates are not as high as they once were. They were once 25-30% per year, but now it's more moderate, 10-15% per year. And so high growth investors probably not as interested anymore, but I think it's just a matter of time before investors who are more interested in moderate growth um, pick up on this company and hopefully bids back up. Right, so moving on to PayPal, another company that was the recipient of, or a beneficiary, I should say, of the global pandemic. It's down now to lows not seen since almost its IPO. And again, the company is still growing. It's still gaining share and gaining revenue. But I guess the sentiment around this company is very negative. But I think the fundamentals still look strong despite concerns about increasing competition. All right, Hershey's. As a chocolate lover, I must say I'm glad to see Hershey's uh, stock at finally at a price where I think it's affordable. Of course, it ran up recently, but now it's now back down to a P/E ratio of close to 20 to 1. Um, and so Hershey's, I think, is a good shout for the long term because people love chocolate. I don't know about you, but I love it. And I can't see a world without chocolate. So I can't see a world without Hershey's. All right, moving on. So Rent-A-Kill, which is a pest control company, they got a big decline about the turn of the year, but now they're bouncing back, and we think that Rent-A-Kill is a good long-term play because people need to, employ pest control in their homes on a regular basis. So we think that this is a good long-term shout as well. Alibaba, something I've spoken about on this channel for a long time. Alibaba is down simply because of what's going on in the China market, but we think that Alibaba is an interesting play. It's a tech company, a tech behemoth that is, I guess, poised to grow in the future. And we think that at this price, Alibaba is probably the most affordable mega cap tech stock in the world. And as I guess sentiments around China shift, we expect that the public perception and the price of Alibaba's shares to also change with that perception. All right. Market Access Holdings, admittedly, not a company I know a lot about. It's just past our screeners. Still doing some research on it. But if you know more about this company, please share your comments in the comment section below so we could all learn more about it as we do some research here as well. But we see that Market Access is now more affordable. Diageo, the spirits company, down a bit, but long term, we think Diageo is a strong play because people love their libations. Canada Goose, the luxury apparel company, which is famous for its jackets, is also down primarily due to increased spending um, on buildings, storefronts, etc., and of course um, inventory. Temenos is down a little bit as well. Another company need to do more research in. You see that big drop. Temenos provides banking software. 3M, which is down because of litigation, and Encino, we think has potential to be something like Temenos in the future. And so, guys, these are the stocks that we think are undervalued. So let me know what you think about this selection in the comments below. Ciao.